One of the most commonly used tools by traders is indicators, but I can also say they are one of the most misused tools. Some see them as a magical formula, while others throw them straight into the trash. So what's the truth? Do indicators really give us an advantage, or are they just flashy decorations that clutter the screen? Today we'll find the answer to this question. If you're ready, let's begin right after the intro. What is an indicator? In the simplest definition, an indicator is the interpreted version of price through mathematical calculations. RSI, MACD, Bollinger, EMA, stochastic. All of them are derivatives of price, volume, or time. So basically, an indicator is just processed price. Remember this, price is the source, the indicator is the derivative. That's why an indicator will never show you the future. It only gives a different view of the past and the present. Now let's talk about the wrong usage of indicators. Most beginners see them as signal machines. RSI above 70 equals sell, below 30 equals buy. MACD crosses up equals go long, crosses down equals go short. You've probably heard this too, but the market is not that simple. RSI being above 70 doesn't always mean the price will fall. Sometimes RSI goes up to 90 and the price still keeps rising. MACD may cross, but if the price is ranging sideways, nothing happens. And you end up entering at the wrong time, hitting stop loss over and over again. That's why indicators don't give orders, they just give perspective. So what are indicators actually useful for? 1. Measuring momentum. RSI, the MACD histogram, stochastic. These show you the strength of market momentum. For example, the price is rising, but RSI is making lower highs. That's a divergence, showing momentum is weakening. 2. Seeing the strength of the trend. Moving averages like EMA or SMA clarify the trend direction. If price is above the 200 exponential moving average, the market is generally bullish. If it's below, it's bearish. So EMA simplifies the trend for you. 3. Measuring volatility. Bollinger bands show whether the market is contracting and about to make a sharp move. If the bands are squeezing, price will likely explode soon. But remember, the direction will be shown by price itself, not the bands. 4. Filtering indicators can add filters to your strategy. For example, you may only want to go long when the trend is up. Here, EMA can act as your filter. Let's give some real examples. The stock is going up, RSI is at 80. Most traders say, overbought, sell. But the trend is strong, and price rallies another 20%. If you only trusted RSI, you'd miss the profit. Lesson: RSI is not for showing trend reversals, it's for confirming momentum weakness. Another case, MACD gives a bullish crossover. You instantly go long, but the price is ranging and you get stopped out multiple times. MACD alone is useless. But if price also broke a support resistance zone, volume increased and MACD crossed, then the signal is confirmed. So, what indicators are not useful for? Predicting the future, giving guaranteed buy-sell signals, forming a strategy on their own and what they are useful for, measuring trend strength, showing momentum and volatility, acting as a confirmation mechanism alongside price action. Professional traders think differently. They put price first. Indicators are only supportive tools in the background. No professional says, I only trade with RSI. Instead, they read the price action and use RSI for confirmation. Here's the key point. Indicators should be your glasses, not your compass. Price draws the path, the indicator just helps you see it more clearly. My advice for beginners: don't use 10 indicators at once. 2 to 3 max is enough. Don't rely on indicators before learning to read price. Test both the strengths and weaknesses of an indicator. Use indicators as support for your strategy, not the main foundation. In conclusion, indicators are neither magical tools nor complete garbage. They are assistants that give you an extra perspective alongside price. Remember, the main player is price itself, indicators are just side characters. On Graphics channel, in the next videos of this series, we'll break down the most popular indicators one by one: RSI, MACD, Bollinger, EMA, all with real chart examples. So don't forget to subscribe and turn on notifications, because the upcoming videos will completely change the way you see the market.